Let's have a conversation. The big picture. Michael Landsberg, Chief Investment Officer, Landsberg Bennett Private Wealth Management, is with us. Are you worried about the government shutdown? Is this something that is going to be monumental to you, or not necessarily?
No, Nicole, I don't really think that it'll be monumental. I think what's interesting is, and I think the concern we have is I don't think you're going to get any more jobs data. So the good news is you've got some private jobs data to go on. If it drags on longer than the 8 days you're talking about, my concern is October 15th, you're supposed to see CPI. What if you don't get that? We think CPI is going to be accelerating, actually, this October, the October announcement, which is September's number, which I almost think the Fed will be more in that cutting mode because they don't have the accelerating data that we're seeing in September. So I think it'll be interesting to play out. I don't think the Trump camp is that disappointed that there's going to be a lack of government data getting put out to the Fed.
Yeah, understood. I mean, we know that Trump said that there may be some federal layoffs and they may have to do a lot. I mean, this is what sort of was the game plan in his first administration when they did actually shut down the government. I mean, that brought some people being furloughed. We'll have to see on that. What are your rate cut expectations? What do you think the Fed should do? Most people are expecting 2 more cuts this year. What say you?
What's interesting, the difference between what I think is going to happen and what I think should happen. I'm not in the camp here that I think that we should be cutting more. I think stocks are at all-time highs. I look at inflation starting to reaccelerate. This looks a lot like what we had last year. We had basically rates, kind of inflation low through the August-September time frame, and it rallied back north of 3%, in a hurry. The treasuries went the opposite way. They're cutting rates, but the 2-year went up a lot last year, and stocks did well. So I don't necessarily think we need to see all these rate cuts. My concern is you cut rates, you get kind of a blowout on the upside. We always talk about blowouts on the downside, but what if you have this rally that we're condensing a couple of years worth of decent rallies into a 6-month period? I'd rather have this be a slow burn over the next, 12, 18, 24 months. But I think if they continue to aggressively cut rates, you're throwing some gasoline on a fire that I think is already burning pretty well.
Understood. So what's the plan? What's the playbook for someone who wants to invest in this market?
Well, I don't think you can certainly fight the Fed here. So I think the obvious scenario is I think, we're going to see probably rates go lower. Interestingly enough, as most of Wall Street's been very negative on stocks in terms of earnings. Last quarter, going into the quarter, analysts were looking at 2.8% return in terms of EPS year over year. We got nearly 13%. So they're way off, way too negative. The positioning of most people on Wall Street, you see S&P is negative, and the Russell's very negative. So I think you can actually invest in some of these bigger, broader indices because the consensus is actually so negative. I think most people watching this are probably over allocated to Mag 7. I think it'd be smart for people to continue to look away from that. Not saying you have to take all your money out of Mag 7, but we know there's an overweighting there. There's certainly a beta trade there. It makes sense to add to some names that aren't in the Mag 7. And there's been now 25 or 30 names in the last 6 or 7 quarters that have outperformed Mag 7 that are not all in the same space. And I think that makes sense from a risk standpoint, is to diversify a bit, not just stay in those 7, 8 names that have been really the drivers of this market for a while.
And we could talk more about AI in a moment, but I think your names that you brought to us today are really interesting. I mean, you talk about the police body cameras and Axon, right? Tell us a little bit about that story. You like that stock?
I love that stock. And the stock actually is one of those, probably that's one of the better ones that we like from an investment standpoint, because it doesn't go straight up. It goes up, pulls back a bit, goes back up. It gives us a chance to get back in. But they've got, good growth. I think 30% is kind of the compounded growth rate the last 6 or 7 years. Stock's about 17% off of its 52-week high. Police body cams and tasers are not getting brought down. Those orders are continuing to go up, and their issue is going to be, can they make them fast enough? I think internationally people are going to look at this and say, hey, we probably want to protect our police officers. Having these things makes a lot of sense. And if you're running a city, you certainly want, most times when we see the body cams kind of tell that the police were telling the truth. Probably 95 out of 100 times, it's probably good that the body cams are there. So I think you're going to see more demand for these. And again, it's not an AI type play. It's got some scenarios that I think are kind of nuts and bolts things that police, whether it's state, local, federal, need.
Yeah, and look, I mean, people are now putting all kinds of dash cams and, because there's a lot of insurance fraud happening. I mean,
Absolutely.
The thing about cameras, people want cameras everywhere on their homes. We have the Ring cameras, but I understand what you're saying about the police body cameras. Very, very important tool. Let's talk about Shark Ninja. Now, this is an exciting name, too, for all the household products.
Yeah, it's one of those names that it's kind of like it just magically appears in your house. You don't know how it got there. And then, you start looking at the business. They got a great market share, basically in China and in the U.S. Again, margins are strong. Growth is very, very strong. And again, they get their foot in the door with one product, and you continue to find more and more and more. A lot of folks in my office were surprised to find out that we had a blender that was a Shark Ninja for a long time. And people are like, oh, I really like that blender. So good products, available lots of places. Price points are better than some of their competitors, which I think is attractive from an environment where, hey, everything's expensive, but a lot of these products are less expensive than their competitors, and oftentimes they're better. I mean, their vacuums are a really good vacuum versus a much more expensive Dyson, for example. And I think that's an area that value works for there. Obviously, it's a cheaper price point, but the growth is there, and I think they continue to innovate, and that's a business where, again, people are buying what they know, and they get one product in the door, they'll continue to buy more.
And there's also a feeling, too, that corporate earnings have, for the most part, been pretty good or better than expected and continue to look good going forward. Would you agree with that? Because that could be a catalyst, no?
Absolutely, Nicole. I think what's happened is I think most people were way too negative in the second quarter. I continue to think, again, the 2.8, they came in at 12.8. They bumped it up to being up 7, and we think that's, again, too low. And I think you're looking at the positioning as a lot of people institutionally are kind of underweight this market. They've hedged themselves out of making money. If you look at that, again, in the Russell, for example, the 2000, they're actually short that. And that's done well. It started to pick up some steam. So I think most people, the miss is going to be if you're too negative and earnings continue to deliver, as we think they will, I think the market plays catch up. And I think that's what happened, in the last, let's say, 90 days. A lot of these institutions after the quarter got reported said, well, we are way too negative on this. Maybe they're reading into the tea leaves with tariffs and the negativity and a lot of the political back and forth. And again, the government shutdown will be one of those things that's also thrown in there. But at the end of the day, we're not buying shutdowns. We're buying corporate earnings. And corporate earnings are quite strong. And I like an environment where people are underestimating what these companies are going to make. I think they'll continue to do well. And I think that's a spot that you want to be in.
All right, Michael Landsberg, Chief Investment Officer, Landsberg Bennett Private Wealth Management. Michael, great to see you. Thank you. And we'll keep an eye on Axon and Shark Ninja.